Portfolio red. Are AI stocks finally crashing? The AI rally is over. What now? And it's not because earnings are bad. It's because the price of borrowed money just changed. And almost nobody is talking about it. Here's the part that should actually scare you. This is not an earnings problem. This is a capital cost problem. And right before earnings season, that's the most dangerous kind of problem there is. So here's my call. What you're watching is not a stock market crash. It's a repricing of risk. And once you see it, you can't unsee it. Because companies are quietly rewriting how they spend money. Right now, this week. Why does this matter to you? Because if you don't understand this shift, the next earnings report is going to move your account and you won't know why. But once you know these 5 signals, you'll know exactly when to move and when to sit still. My name is Moon. I obsess over one thing: where money actually moves, not where headlines say it moves. If you're the type who checks your portfolio 5 times a day wondering whether to sell or hold, hit subscribe. And if this helps, drop a like. It actually helps this channel keep going. Now here's a myth almost every investor still believes. Good earnings equals a rising stock. Let's break that right now. Because the question the market is actually asking isn't how much did you make? It's where did that money come from? And this is where it gets genuinely interesting. I'm going to show you exactly where the money is moving, using 5 signals. Signal 1. Where's money actually flowing right now? Into treasuries. Why? Because safe money finally pays real interest. Let's put real numbers on it. A few years ago, companies borrowed at around 3 to 4%. Now that same borrowing costs far more. And when the loan is big, that extra cost doesn't just add up. It compounds. Here's why that's genuinely scary. Borrowing to bet bigger used to be the winning move. Now the interest alone eats the profit. Think of it like someone who ran up a credit line to buy stocks, and the rate on that line just doubled overnight. And here's what most people genuinely don't realize. This isn't just a retail investor problem. Giants like IBM and Meta are living through the exact same math. So what are these companies actually doing right now? They're quietly re-examining every dollar they planned to pour into AI infrastructure. That's what a strategic pivot looks like in real time. Signal 2. So who's actually moving the market right now? It comes down to the next earnings reports from the mega caps: Google, Microsoft, Meta. But here's the real point. It's not about the numbers. It's about psychology. Investors are genuinely torn on whether this AI spending is overreach or the smartest opportunistic bet on the table. Well, here's an easy way to picture it. Imagine a friend takes out a huge loan to open a coffee shop. If it works, everyone calls it visionary. If it flops, everyone calls it reckless. Right now, the market is watching that coffee shop owner and holding its breath. So this earnings season, saying we spent more than last year isn't going to cut it anymore. The market wants proof this spending actually turns into cash. Without that proof, this entire hardware-driven rally could be over. So right up until those earnings reports drop, money is quietly leaving anything uncertain and hiding in anything solid. Now that's the entire story behind Signal 2. Signal 3, and here's something even scarier. Geopolitical tension tied to Iran just pushed Brent crude above $85 a barrel. Here's why that connects straight back to your portfolio. Higher oil pushes inflation up. Higher inflation delays rate cuts. And delayed rate cuts make that expensive capital problem we talked about even worse. It's all one chain. But here's the real core of it. Right now, the stock market is almost the only thing propping up the current administration's tariff-driven economic experiment. So if the market keeps sliding, oil keeps climbing, and recession talk starts building, this stops being just a stock story. It becomes a political one, too. That's Signal 3 in one sentence. Earnings, rates, oil, and politics are moving as one single organism right now. Miss any one of them, and you'll never understand why your account suddenly moves. Signal 4. So where do you actually put money right now? Here's my honest answer. This is not a season for predicting. It's a season for confirming. First move. When you read the next CapEx guidance, don't focus on how much more they're spending. Focus on how confident they sound saying it. That confidence is the real signal. Second move. Keep watching oil. If Brent crude holds above $85, that's not just a geopolitical headline anymore. Treat it as an inflation warning. Third move. In a low-confidence stretch like this one, don't go all in on a single date. Split your entries around the earnings window instead. It's not a magic strategy, it's just a guardrail against betting on emotion. And the last move, this one actually matters most. The moment companies start visibly cutting their planned investment, that's your signal the current tech rally is over. Don't miss that moment. Now, I know exactly what you're thinking right now. Moon, isn't this just a normal pullback? We've seen scares like this before. Fair point. You might be right, but here's why this time is different. Rates, oil, and politics are colliding at the exact same moment. Most past pullbacks only had one of those pulling the strings. So this isn't a call to panic sell. It's a call to confirm before you act. And the confirmation point is the next earnings season. Full stop. Let's bring it home. This sell-off isn't about earnings. It's about the cost of capital. Money is already moving from uncertainty into safety, and the real verdict lands at the next earnings report. Here's the truth nobody tells you. The real investors are the ones reading the numbers while everyone else is panicking. That's it. That's the entire edge. So save these 5 signals. Pull them back up the moment those earnings reports drop. That single habit is what separates people who react from people who prepare. If this helped you see the market differently, that's exactly why I make these videos. Hit subscribe if you want more of this. And if it was useful, well, it genuinely helps this channel reach more people who need to hear it. Study this with me. Come back for the next one. We'll keep reading where the money actually moves together. Until next time, protect and grow what you've built.